This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Top oil exporter Saudi Arabia may cut the prices of most crude grades to Asia in December as weaker than expected fuel consumption in China amid its strict COVID-19 rules put a lid on regional demand, trade sources said. State oil giant Saudi Aramco may lower the official selling price, OSP, for its flagship Arab light crude by about 30 to 40 cents per barrel in December, according to 5 respondents surveyed by Reuters. The price cut comes as China, the world's largest crude oil buyer, extended stringent mobility controls to contain the highly transmissible Omicron variant after a surge in daily reported cases.
Germany's Expert Gas Commission on Monday presented proposals to the government for a gas price cap in Europe's biggest economy to help citizens cope with soaring energy prices and encourage companies to remain in the country and preserve jobs. Households in the country are paying more than 2.5 times as much for an average annual gas contract from their supplier than a year ago, before Russia's invasion of Ukraine disrupted gas supplies and pushed prices sharply higher, data from energy price portal Check24 shows. In its final report, the Commission said Berlin should cap gas prices at 12 euro cents per kilowatt-hour, kWh, for 80% of households' basic consumption from March 2023 until at least the end of April 2024.
Moving on to the top news in the energy sector.
Britain's energy price cap for consumers and government-funded discounts on bills for businesses will push official measures of inflation lower, the country's statistics office said on Monday. The Office for National Statistics said the Energy Price Guarantee, EPG, for households, and the Energy Bill Relief Scheme for businesses, would lower the unit prices of energy that feed into inflation indexes. The Consumer Prices Index will hence be lower while the schemes are in operation than if the EPG had not been introduced, the ONS said in a statement.
Oil prices fell on Monday after weaker than expected factory activity data out of China and on concerns that the country's widening COVID-19 curbs will curtail demand. Brent crude futures dropped 69 cents, or 0.7%, to $95.08 a barrel by 12:40 GMT, extending Friday's 1.2% decline. U.S. West Texas Intermediate, WTI, crude was down 84 cents, or 0.9%, at $87.06 after losing 1.3% on Friday. Both benchmarks, however, are on track for their first monthly gains since May.
Next, we have the top news in metal markets.
Copper prices fell on Monday as rising COVID-19 cases and weaker than expected manufacturing data in top consumer China raised concerns over demand weakness. COVID restrictions are affecting factories in numerous Chinese cities and the yuan fell to its weakest since 2007, making dollar-priced metals costlier for local buyers. Benchmark copper on the London Metal Exchange, LME, was down 1.5% at $7,439.50 a ton at 16:55 GMT. It has lost around 1.6% in October, its 7th consecutive monthly fall.
Iron ore extended its rout on Monday, with Dalian prices set for their sharpest monthly drop since February 2020, as an unexpected fall in October factory activity in China added to a gloomy outlook for the world's biggest steel producer. China's official Manufacturing Purchasing Managers Index stood below the 50.0 mark expected in a Reuters poll, dragged down by softening global demand and COVID-19 curbs. The most traded January iron ore on China's Dalian Commodity Exchange ended daytime trade 4.1% lower at 606 yuan and 50 fen, $83.31, a ton, after touching its weakest since July 22 at 602 yuan and 50 fen earlier in the session. We will now look at the top news in the agricultural sector. Ships brought grain from Ukrainian ports on Monday, suggesting Moscow had stopped short of reimposing a blockade that might have caused world hunger, despite suspending its participation in a UN program to safely export grain from the war zone. Air raid sirens blared across Ukraine and explosions rang out in Kyiv, sending black smoke into the sky as Russia rained missiles down in renewed air attacks. Ukrainian officials said energy infrastructure was hit, including at hydroelectric dams, knocking out power, heat and water supplies. Ukraine's military said it had shot down 44 of 50 Russian missiles. But strikes left 80% of Kyiv without running water, authorities said, adding they hoped to restore it quickly. 2 people were reported injured in the Kyiv region.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.